Should we buy or sell the Israel stock market ETF? So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So Israel is in the Middle East, 23% here from the 52-week low, 12% away from the highs. So here is, that big picture weekly data points, and we see that throughout the history of the ETF, it's been very much up and down. It's huge into these, time cycles. We have had some pretty reliable shorter time cycles. We see that even the most recent rally fits very nicely with the time cycles. The issue with the most recent rally is that compared to previous ones, this one is very aggressive. So 4 weeks in a row here of very strong rally. If you look at the history here, we usually see some pullback. If you go here to the daily data points, we see that we are testing a bit of a dangerous level. So let me just draw that in because we are testing the all-important red 200-day moving average. So it's definitively watched by a lot of people. There's been troubles in the past below it. Here as well, we did have some jockeying between the bulls and the bears, but the 200 daily moving average can also be a support level as well. But currently, it is clearly a resistance level. We were not able to close above it on Friday. And if you look at some of these other indicators, like the weekly RSI here and the PPOs, we are not at high danger levels yet on weekly RSI. When we go to daily RSI, and also looking here at the MACD, the PPOs, this is the distance from the 20, 50, and 100 daily moving averages. This is a dangerous territory. It just is. The previous time we had this RSI level, let's find it was late here in it's in 2021. Yeah, it's here. So this is where we got into the same RSI territory. We go a bit higher, but then we did see a very substantial correction. So let's actually measure here from the peaks here to the low. Yeah, approaching a 10% correction. That is sizable. So the issue here for Israel is that, yes, we have seen a strong rally, the bulls are in control, but looking big picture, we see that it's very common for the bears to also have their day in this market. It clearly goes up, down, up, down, up, down. So this is a dangerous situation for the bulls. So I write 200 daily moving average resistance in my notes, and -4 here in favor of the bears here on the technicals. They have a pretty interesting setup, and as long as we are clearly below that key resistance level, the bears do have an edge on the technicals. It's easier for them to put on a trade than it is for the bulls, because the bulls, they have to assume even more strength, while the bears, they just have to assume a bit of a pullback. So let's look at the seasonality here. So to the right, we do get that average data over various time frames. So here's the problem. Over the last 5 years here in green, 7 years in blue, and 10 years in red, from the 15th of August leading into around 22nd of September, the seasonality is bearish for Israel. That's not good for the bulls. Over the last 5 years, going from August to September, and we are on the 14th of August now. The seasonality is clearly bearish. September is the worst month for Israel. Over the last 10 years, August is weak, September is a flattish month, October is a bit weak. Then big picture, let's look at the last 15 years. Like that, August, the current month, is the worst month for Israel. That is clearly favorable to the bears. So I give the bears a -5 here on seasonality. This is simply a much better opportunity for them than it is for the bulls. Now let's compare Israel with America. So if we go here to performance, a year to date, they are extremely similar in performance. Looking at beta, also very similar, a bit smaller, lower beta here on America. Price earnings is a bit higher on Israel, so less value. Dividend in Israel is bad. It's 0.15%, so almost basically zero. Much better yield in America, but still it is only 1.22%. So it's not a dividend ETF. So here are the holdings. So you got a bunch of tech names here, as you can see in Israel. And when we go here, you can see that tech is 22% here. So it actually is, well, pure tech services, it is higher than we see in America. Finance is pretty big, the biggest. And market cap, more diversification. Actually, mid caps, it's the largest one here. So that's interesting to see. Yeah. So when it comes to like fundamental analysis, this ETF is not really that attractive. So yeah, -2 in favor of the bears. So let's look at relative performance. So these are weekly data points. 96% positive correlation with the S&P 500. 91% here with the Europe ETF, VGK. Then -28% with the BNDX, which is the total bond market ETF. Then -24% here with the dollar index. Looking at the short-term correlations, why don't we get any correlation here with the DX? That's a bit odd. But the UUP, it's basically the ETF version. Okay, so 98% positive with the S&P 500, 92% with Europe, 87% here with the bond market, and now all of a sudden it is a positive correlation. Then -87% with the dollar index. So yeah, the strongest correlation we do get is with the S&P 500. So what happens with the SPY is very likely going to affect Israel. So the S&P 500, it's had a strong rally. It's been able to get above the blue 100-week moving average. If you look here at the daily data points on the topic of 200 daily moving averages, we are very close to it. So if we measure, it's 1-ish% above us. If you look here, very recently, fantastic time to short here as well. So the 200 days is definitively going to be something that attracts the bears if we close below it. Definitively just a very good short level, especially after such a strong rally. Yeah, weekly RSI is not like in high danger territory. If you look here at daily, daily data points, many times, as you can see, where we have gotten into this RSI territory, we have seen these pullbacks. Also, the PPOs here are rather stretched. The green 50 daily moving average and the purple 20 daily moving average. The distance between price and those moving averages is definitively on the higher end of the spectrum. The previous time we had this distance was here, and that was also a very good time to turn a bit bearish. So here is Israel against the S&P 500. So you see that Israel, it's been underperforming S&P very systematically, just lower highs and lower lows. But something that is rather interesting and could become a bit more substantial is that if you look at this low here and this, it's a bit double bottom-ish. You see that here, this is very bearish. The right bottom is way below the left. But now there's been a change here. So this is potentially rather interesting. It's a trend change. We've gone from clear downtrend to now moving more sideways. That does not mean that Israel is going to start to outperform the S&P 500, but it means that this systematic underperformance could be not necessarily over, but there's a change. Looking at RSI here on the dailies, we do see that Israel has pushed into a dangerous territory where it usually sees some pullback, meaning it starts to underperform S&P 500. Seasonality is very bearish here for Israel, which is not a huge shock given what we saw here in the charts. Let's quickly look at the relationship here between the S&P 500 and the WT, which is the total stock market ETF. Seeing significant outperformance here from the S&P 500. Looking at the daily data points, we are high on the RSI, but not like super dangerous territory. Looking at seasonality here, um, yeah, we usually actually see some underperformance from the S&P 500 leading into 23rd ish of August. So I do end up with a 2 here on relative performance. What is rather interesting is that the trend of Israel underperforming America, it hasn't necessarily completely ended, but we have seen a very fundamental change, and that was on the very big picture long term. We do, however, end up with a minus 2.3 here for Israel, which means that the data is way more favorable to bearish trades than bullish. The key signal here is 200 daily moving average resistance. So the thing is that we do have some time left. So let's run through some stocks that are in the Israel ETF. One is Nice. It's a company that's in the surveillance industry. So yeah, getting in at the red 200 week moving average certainly been a very good trade, but we have seen a strong rally here though. So the easy money has been made, and here again the 200 daily moving average in red is very close by. We don't have a squeaky clean relationship between the moving average and price. We see that it's been sliced and diced a bit recently, but it's still, obviously it's a very important moving average. RSI and the PPOs, the bulls have pushed us into a territory that is potentially a bit dangerous. Another Israel stock is Checkpoint Software. So I'm just going to look at the Nasdaq listing. Yeah, 200 week moving average in red. I mean, obviously, moving averages matter. Very buyable, buy. A bit noisy, but overall, it worked more than not. And here again as well, this is a very important moving average, being a good buy signal. We have seen a bit of a bounce though. You see that this stock has been very erratic, up and down, up and down. So if you do not get in near the lows or you short near the highs, then this one can be rather frustrating. A very aggressive battle here, frankly, between the bulls and the bears. Looking here at the daily data points, it's very noisy. You see moving averages just coiling all over the place. Horizontal resistance levels, support levels. This one is messy. This is a very messy trade. Looking at RSI, also just dead on in the middle. Just a very classical level where it's not easy to put on a new trade. Also here on the dailies, yeah, just basically in the noise zone. So yeah, the best thing is to get a clean trade. Tiva Pharmaceuticals is also another Israel stock. Here we have the weekly data points. We have seen that we have emerged from a very low level. You see that here and here, double bottom. That's been working out if you got in near the lows. So if you got in here, then you would have like a buffer, big gain, but you wouldn't be closed out. And this is one of the reasons why it is psychologically difficult to get in early at a bearish or a bullish trade. But the benefit is that it can create these situations where you have a buffer. If you sit there, you're considering a bullish trade and you want to have confirmation to enter the position, then that doesn't mean that you get a more favorable entry. That's the problem, because if you wait to say we get above, let's say that this blue 100 week moving average, and then you say, oh, I'm going to turn bullish when that happens, that trade is not necessarily more favorable. That's the issue, because your position starts at zero. But yeah, definitively interesting things happening here with the Tiva Pharmaceuticals as well. So yeah, some other stocks to look at would be Elbit Systems. CyberArk is also listed in Israel, as well as the Nasdaq. So yeah. So we have seen a pretty substantial rally in many stock markets now. There's been a lot of talk about this being a bear market rally. I do think it's a good idea to just be aware of that possibility. So that is why it is prudent to have some bullish positions and also some bearish positions, because then you are more hedged, and you are more prepared for both outcomes. If you do see a major rally to the upside, then obviously the shorts will be closed, but the longs will make money. But to just go full hog in one specific direction is just very, very dangerous.